Welcome back. And right now on our Tech Talk on Futureproofing Enterprise Data Management, how BFSI organizations can accelerate digital transformation, we're joined now by Ravi Shankar, Senior Vice President and Chief Marketing Officer, Denodo Technologies. Well, Ravi is a published author and a frequent speaker on data management and governance. He's responsible for Denodo's global marketing efforts, and his deep expertise in data-related technologies helped enterprises to adopt modern data integration and data management solutions. Thank you so much, Mr. Shankar, for joining us today and giving us your valuable time. With this, the screen and stage is all yours. Over to you.
Hello, my name is Ravi Shankar. I'm the Senior Vice President and Chief Marketing Officer for Denodo. Today, my topic is about future-proofing enterprise data management and how BFSI organizations like yours can accelerate digital transformation. So let's jump right in. If you look at the growth projections right now that have been rolled out by the by the International Monetary Fund, you will see that last year, the GDP was much lower. On a global scale, it was down more than 3 percentage points. And if you break it down by the advanced economies and the emerging markets in which India is included, you will see that the advanced economies actually declined much more than the emerging markets. And part of it is because China did not have much of a dip compared to other emerging markets, which were severely affected like India. But anyway, looking into the future, the current and future, you see 2021, it rebounding much more strongly. Here in the United States, we are actually seeing it much more. But in other places like India, where the pandemic is still going on, it will take some time for it to come back. But anyway, there are projections that the growth will be much more robust. And if you actually break it down by within that emerging markets itself, by the different segments. So you see here the chart on the left, again, coming from the International Monetary Fund, you will see that the emerging markets, excluding China, because as I mentioned, China had a much lesser impact on the pandemic. So the dip for India included in that, and India is in fact called out in the next chart, is that on the right-hand side, is that it had an 8% decline in its GDP in 2020. And then there's an expectation that it will bounce back much more. So this report was generated sometime in April, as you can see, and they are forecasting a 12.5% growth for India in 2021, which is much more than any of the other countries in the world, partly because the dip was so pronounced in 2020. So since the measure is comparing year over year, coming off of a small base, the jump could be much more better as people are vaccinated and the economy start opening up. But the question that we need to ask ourselves is, will that hold, given the current conditions of the pandemic? Now, if going back to last year in the middle, or not in the middle, at the start of the pandemic itself, Gartner did a survey in which they found that about 80%, 84% of the companies experienced some kind of a business disruption. And this was done last March. We are almost 1 year away now. And if you actually do it, it'll be close to 100%. So though businesses were actually spared as a result of the COVID, everyone was impacted to some extent. And the level of disruption that happened within the organizations range from minimal to some companies actually going out of business itself. Now, how is that impacting bringing it back to India? So one is because the businesses have been affected, they have not been able to make the revenue. You saw the GDP decline. The problem is that it is going to impact the spending. So in the IT sector, purchase of the IT goods, and more specifically in the IT sector, it is going to affect us because if you look at this chart from Forrester, they have two scenarios, scenario A and B. Scenario A is a more optimistic way of looking at it, saying that the technology spend by the business, that is the corporations and the government, will possibly be a positive one in 2021 and possibly a positive one in 2020. And they forecasted the scenario B, which is a much more pessimistic one, a 5% decline in the spending last year and a modest increase in 2021. So we don't know the exact numbers of where it landed. Probably it is in the middle of those two, but the technology spending in India was affected by the reduction in the revenue and the staff to some extent. Here is another chart. Again, this was done by Gartner, more specifically with the chief financial officers, again, a year back, in which they were actually asking about the IT spend by the CFOs within the budget. And you can see the list of verticals down at the bottom that had IT spend decreased by more than 10%. And you can see banking, finance, and insurance was not as much pronounced as some of the other industries where we saw, for example, manufacturing, retail, where they had a much more bigger impact. But nevertheless, banking, finance, and insurance was BFSI companies were impacted in the IT spend. While at the same time, there have been some changes in the market in that because of the remote working situation, the online market started taking off, especially like digital payments really took off. And in India here, you can see like 94% of the people have said that they are using the digital payments to purchase products or goods in the last 3 months. And you see the primary providers here like Paytm and then Amazon Pay as emerging as the top two vendors who are supporting the digital payment. So this is kind of taking off on its own, and it's becoming a very lucrative market. So it is important for us as executives, we understand the impact in the sense that revenues went down. As a result, we had lower budget to spend on technology and possibly sometimes lower number of staff. But there was a market movement, there's a shift that happened in terms of more digital transformation. And it is important for us as executives to figure that out, to support the growth in those areas and provide the continued running of the business without it actually going down. So that's why it's important for us to on the line. But this requires business agility. It is not easy to shift from one mode of working to another mode very quickly. There are a lot of businesses that were not able to support that model. For example, a lot of the businesses were like physical, but once the economy shut down, they had no option of moving that to the virtual. They had to basically close down, and the revenue went down. They had to let go or furlough their employees. And by the time they came back, again, the second wave came and they had to shut down. So things were very haphazard. It's very important for the business to be agile, in order to be able to support a shift, a market shock, in fact, that happens something like this. But the business agility has to be supported by technology agility. You cannot really have the business react very quickly without the underlying technology supporting it. Because these days, much of the business is actually run through the technology. And to the extent that the technology can be retooled to adapt to the new situation, you cannot have the agility from a business perspective. And that's why it is important to have a technology that will provide you the flexibility in such cases to be able to shift. So one of the things that we actually saw last year was the movement to the cloud, because the investment or the budget actually went down. Companies were shifting their expenditure from capital expenditure, which is in the data centers, to the cloud, which is more of an operational expenditure. But to support the transition, how flexible is your architecture to do it? So here is an example of how a typical architecture in a large organization is, with hundreds of different systems located in different places. When the business users want an integrated view of the data, then the IT needs to do some mishmash of integrating the data and providing that to the business users, which is not very amenable. So the moment you kind of get rid of some of the applications in the data center and you move them to the cloud or purchase new SaaS applications over there, the challenge is going to be that your technology cannot really immediately shift. There has to be a lot of retooling that needs to be done. So this is not a very agile technology architecture that can actually enable your shift from a business perspective. So the question is, how do you basically get to that level of flexibility in the technology that will enable your business to be more agile? So here is a slide from Gartner that was just presented last month in one of their conferences, in which they identified the one that I've circled here, number 3, data fabric as a foundation for accelerating the change. And that is the topic that I'm going to be talking about today, about the specific one. Okay, so we will talk about what a data fabric is and how it can provide the agility that you're looking for. So the data fabric primarily is, as you can see here, it's like a layer that separates the underlying systems from the business users. So the businesses need the agility in terms of being able to either bring in some new people or shift to new channels or new sources of revenue. And in doing so, they have to rely on the underlying technology. And I just mentioned that because of the way the technology is tightly integrated with the business applications, changing the business cannot really happen without the technology being changed, and the technology cannot change very fast, which means the business cannot change very fast. What if you kind of put a layer in between the business and the technology, so that way that intermediary layer basically acts as an abstraction, as a buffer to figure out the technology changes and then provide the data to the business users. So that way the business users are not directly tied to the technology. They can go to this intermediary layer and they can ask for the information, and that intermediate layer will go figure out whether the information is in the data center, in the cloud, and it can integrate that information and deliver it. That is the data fabric. And more specifically, there is this notion of a logical data fabric because it uses a technology paradigm called data virtualization. So data virtualization is very similar to like a server virtualization, where you can use like VMware, for example, to virtualize the underlying hardware, and you can run any operating system or applications on top of it. So similar to that, the data virtualization abstracts the underlying systems and applications irrespective of their location, number one, their format, whether it's structured or unstructured, and number 3, in terms of the latency, whether it is data at rest, like in databases, data warehouses, and so on, or data in motion, like IoT data, streaming data that actually comes into the organization. So that data abstraction, which is the number 1 bullet point here, is a very important concept that this logical data fabric that is enabled by the data virtualization provides. And it integrates the data across all these different systems without replicating. We saw in the spaghetti diagram before, when the business comes and asks the IT, I need all this integrated data. For example, I want to know who are my most profitable customers, what products did they buy, which channels did they buy, did they come into the store, did they buy it online, do they have active service warranties, and all the questions when you start asking, it requires going against a CRM, ERP, PLM, multiple different systems. And one could be a SaaS application, one could be a legacy application, another one, the data center. It is very hard to stitch them all together and provide. And very many times the IT replicates that into like a data warehouse or a data lake and provides that information. But data virtualization accomplishes that integration without replicating the data. Replication is very bad because once you replicate the data gets out of sync. It takes time to replicate the data. It requires additional storage. And there's a delay in getting the data to the business consumers. So it is very important to have the data come from the sources as they're created, and the data virtualization does that. That's the 3rd bullet point. It delivers the data in real time. So when the business user says, I want to understand all this data, the data virtualization layer goes to the underlying systems, doesn't matter where it is, on the cloud, on premises, third parties, and brings the data together and unifies it from a format that the business user wants and provides the data to the consumers. And because it becomes the enterprise data layer where it knows all the different types of data, the location of the data, and so on, it in itself becomes like a catalog. It knows where the data is. So you can go and query the data. Very many times for business users, it's a challenge to find the data. But using this data virtualization layer, the business users can query, I'm looking for Mitesh, for example, and it will give you all the instances in the different systems that Mitesh is available, and also link it to other records and provide connected information. And that is all done using the metadata. So that's the fifth bullet point, or the second one on the right, in which it talks about where it has the information about where the data is located. It does not store the data itself, but it stores the information about the data. And it secures the data so that only people who have access to the data will get the data. Not everybody will get that data. And then delivers the data in the format that is needed. So you want to see in the finance department in a certain way, it provides that. If you want the marketing or sales department want it in a different way, it will provide that. So that's the solution that provides the agility by disintermediating the business user from the underlying technologies, but the business users can move faster and the intermediary layer will take care of that. If you have not heard about the data fabric or data virtualization, there are actually technologies in use. The data virtualization is a more mature technology. This is a Gartner hype cycle for data management from July of last year. And you can see data virtualization is all the way in the plateau of productivity, which means it's a very stable technology. The data fabric is still on the peak of its hype cycle because it is still very much a newer concept, but with the support of data virtualization, it becomes a much more stable concept. And again, another chart that shows that data virtualization is one of the technologies that is included in the plans for data management by companies over the next 12 months. This is a different chart from Forrester research, and their base actually tells data virtualization is a technology people are looking to use. So this is something that is actually being predominantly used in very many different applications. So let's talk about a use case of a customer that is actually using the logical data fabric supported by data virtualization. Seacoast Bank is a regional bank based out of Florida, and they have been growing quite a bit in that region by acquiring other banks. So it's a retail bank. They could acquire like a mortgage bank. They could acquire another wholesale bank and so on. So they're kind of growing, expanding their portfolio, and they want to be able to resell or their existing or upsell their existing products to the newer clients. So if you're having a retail accounts, you want to sell them mortgage, or if you have mortgage clients, you want to sell them retail accounts. So that way you can increase the number of accounts, the share of wallet among the customers. But they had a challenge similar to the spaghetti diagram that we talked about. The business was not very agile in terms of being able to understand how the data actually can be integrated across these different banks to provide a cohesive view of all the customers across the newly acquired banks and be able to provide the newer services. That is because down at the bottom, you see the data sources, the FIS, which is a financial information system, was a third-party system that they could not really retool to be able to provide this unified view. So they wanted to bring back the data management within their organization itself. And then they had, the decision was to use the logical data fabric, or in this case, using Denodo for data virtualization, supporting that logical data fabric, and then providing that to the business users through the analytics layer. So the logical data fabric integrates the data not only from the FIS system, but also these underlying systems. And once it has that unified view, they were able to create these virtual data marts or separate views. So one view for credit lending, another one for loan verification. So they were able to create these multiple different views for different business functions and expose them through either SaaS, which was their primary analytics platform, or Tableau, through which they can actually see and provide that information. Now, this was a very powerful one for them, first of all, to stand up this separate logical data warehouse or logical data fabric. It took them only 50% of time than a traditional one if they were set up a physical one. So instead of spending like 8 months, they spent 24 months doing it. And also for them to retool the reports, they were able to do it much faster. Before, any custom reports would take 3 days. Now it takes only 3 hours for them to do it. So look at the amplification, the volume that they can handle as a result of this faster turnaround. That is what a logical data fabric basically provides, supported by data virtualization, and enables the business to be more agile. So that was one example. There are very many companies across the board that actually use it, and some of them have actually benefited by deploying it for the during the COVID times for the new use cases, and be able to benefit from that by using this agile data virtualization. And hope that is of interest to you. If you have any questions on this topic, feel free to email me and I'll be happy to respond. Thank you very much. I'll see you later.
So thank you so much, Mr. Shankar, on that Tech Talk.